Hello and welcome to this week's edition of Murphy's Market Minute with Elliot Omenson.
Nathaniel Vossman.
It is the 8th of May, and what a month. What a year. Right?
It's been pretty crazy.
Yeah, a little stressful at times, but I feel like a lot of that's subsiding. And so a week ago, I think we talked to everybody about moving a little quicker than what I expected out of some of our cash positions and going back into equities. And boy, oh boy, am I glad we did what we did.
Yep.
So what do we got going on today, Nathaniel? Nady V, by the way, that's my new name for him is Nady V. He doesn't like it, which is why I'm calling it.
That's a hell of a name.
Nady V.
Wait.
No. I think it's like, if you're going to be a famous podcaster.
My famous podcasting name is Nady V.
Nady V. Nady V.
Well, today is a pretty good day right now in the markets, and that's off of Trump's big announcement today, even though it was kind of what we expected. I know yesterday he had said that he was going to make an announcement. I think last night he kind of confirmed it was with the UK. And, of course, this morning it was a trade deal with the UK that he's announcing, and so it's going to lead to, drop some tariffs, especially on goods like cars, agriculture, and then I think maybe some healthcare stuff. And the markets have responded quite well. I know you said that there's other trade deals in the pipeline. That's to be expected.
Yeah, so word on the street is there's 17 total. This is the first of those 17. Right now, what I found interesting about it is that Trump has stated that he's not eliminating the 10% base tariff.
Yep.
Okay. And then they alluded to what they call trade barriers. And so I think those are like duties and stuff like that, which are a little bit different than tariffs.
Which is exactly why he put the tariffs on in the first place.
Yes. And so so right now, and obviously it's early, but the market spiked up pretty good, 1.4% for the S&P 500, 1.42 for the Dow, 1.78 for the NASDAQ. The Russell 2000 is up 1.55. Even crude oil's up almost 3, which I didn't really expect. For all those of you that are into the crypto world, Bitcoin broke 100,000 again. It's at 101,305 at the moment. Ethereum broke 2,000. It's up 13%.
Yeah, it's up big today, last 24 hours.
Yeah, Bitcoin's up 4.3. All right. Apple's up 1.68. Tesla's up 4.56. So basically, I think between the economic reports that have come out in the last week, it's like it's crazy to me. We were talking about yesterday that there is rumblings. 75% of economists for some reason expect there to be a recession, which just blows my mind.
It might be a little lower, but yeah, but still more than you'd think. Way
more than you would think. And again, the thing that too is we're talking about two separate things here. Which is always interesting to me that there's different times when the media makes sure to point out that the economy and the stock market are not directly correlated. And then there's other times where they try to act like they are correlated. So which oddly enough is true. Sometimes when the economy goes up, it makes the market go up. Sometimes when the economy goes down, the market goes down. But they're not directly necessarily correlated. And so right now, I personally can't envision what could possibly cause a recession. We had one quarter of GDP being negative strictly due to the increased imports of stockpiling to try and buffer the tariff situation.
Yeah.
And those imports directly count against exports, and that is why basically the GDP for the first quarter was negative 0.3%. I would imagine this next quarter is going to be pretty stellar, GDP wise, and I think the stock market. We had 9 straight days of gains. We recovered all of the losses. We had a couple days down after that. That's when we bought back in. And now I think you're looking at probably a pretty good rest of the year, personally.
Yeah, because like each time one of these trade deals rolls around, the markets will react well, and there's lots to come. And the fundamentals are strong, employment's strong, job growth is strong, inflation's looking good.
Yeah. Now, the Fed did come out yesterday and state that there was 4 key pillars they were looking at that create uncertainty in their mind that are causing them to hold off on lowering interest rates while that sorts out. I love personally, I love the fact that interest rates are where they're at. What are they, like 4.25?
Yeah, it's like I think it's like a little range, like 4. I think it's 4.25, 4.5 or something.
Yeah. And I like that. I think that's a healthy interest rate personally. I think especially for our clients, for retirees, it gives you the ability, because a lot of our clients love to hold what the average American would consider to be a significant amount of cash in their bank accounts. Without interest rates being high, it's hard to earn anything on that money. A lot of our clients also like CDs as a safe position, and without these interest rates, it's hard to get a decent return on those. And so like I would love to see an economy where homes are able to be bought, cars are able to be bought, savings accounts earn decent interest, CDs earn decent interest, and I really believe that between 4 and 5% is the perfect window for that. Now, whether or not the U.S. government can afford to keep interest rates that high with the massive amount of debt that they carry, I don't really see as a possibility. But I think it'd be really good I think we'd have a really incredible economy if we had a strong jobs market, we had interest rates over somewhere between 4 and 5. I think that as people got comfortable with it, because I think we got used to super low interest rates for so long that people felt like they can't buy a home unless interest rates are at 3%, which is insane. And so I don't know. I just think right now it's like incredible to me. I'm trying not to be too bullish, but I'm pretty excited with the way the economy is looking.
Yeah, definitely. And on those rate cuts, I use a lot of the poly market betting odds, and gives you a good idea of pretty realistic probabilities of things. And right now, the betting odds really have the July Fed meeting is pretty likely to have that first rate cut, and if not, it'd be in September.
Yeah, and that's going to make the markets just go.
Yeah, so that's another thing to be looking forward to.
Yeah. So you start stacking these trade deals that are coming in on top of some rate cuts, in the middle of the year to the end of the year. And I really wouldn't, I know a lot of people have put the stock market is gaining another 15% this year. I know before all the tariffs and stuff like that, they were saying another 20 plus year. But yeah, I totally think that's all perfectly still in line. So anyways, anything else you think we should hit on?
No, I think that covers just about everything major going on this week.
Yeah. All right. Well, until next week, this is Elliot.
Nathaniel.
Nady V signing off.
Mm-hmm.